Hello and welcome to South Asia Chat, a podcast brought to you by the Institute of South Asian Studies at the National University of Singapore. I'm your host Divya Murali, a research associate at the Institute. The year 2024 has just wrapped up and we have entered the halfway mark of the current decade, which one could possibly say has been the most challenging one for the world economy since the dawn of the millennium. As 2025 begins, we take a moment to see how 2024 was and how 2025 is likely to look like for South Asia. In this episode of South Asia Chat, Dr. Amitendu Palit, Senior Research Fellow and Research Lead Trade and Economics at ISAS-NUS, joins us in conversation to discuss the strategic economic outlook for the region in the year 2025. Happy New Year to you and welcome to today's episode, Dr. Palit.
Happy New Year to you, Divya, and thank you for inviting me to today's episode.
To start with, how do you think 2024 fared in terms of overall economic performance globally and specifically for the South Asian region?
I think 2024, on the whole, was a year that the people from the region would look back with some satisfaction. And I call this satisfactory because there were a lot of disturbances and disruptions around the region because the conflicts persisted between Russia and Ukraine. The conflict persisted in Gaza. There were elections that were taking place in various parts of the world, which would often produce surprising outcomes. And notwithstanding all these and the effects that it create, so for example, there were effects on the value of the dollar. There were effects on the prices of essential articles, essentially food grains and a large number of other things. So, with all these taken into consideration, I think the region did reasonably well. But having said that, there is also this factor to be noted that the region's growth was primarily driven by India. And we had disruptions in Bangladesh. Bangladesh experienced a very significant political churn. We had disruption continuing in Pakistan, which has to some extent affected its economic performance. We had a new government in Sri Lanka, which is looking to put in place the economic turnaround agenda, but perhaps that agenda is such an ambitious one and a far-reaching one that it's not going to deliver results immediately. We'll need to wait and see how the benefits pan out. On the other hand, as far as the smaller economies of the region are concerned, Maldives, Bhutan, Nepal, and Afghanistan, between themselves, while not producing very sparkling growth performances, nonetheless managed to grow at reasonably bottom line rates. But the story of the region was clearly that of India, and I think India would eventually, if all the estimates are uh, going to come out correctly, end up with a pretty high rate of growth. There are expectations it might even be around 8%. So, with that kind of a rate of growth, India remained the largest contributor to regional growth in South Asia, and India also remained one of the most major contributors to overall regional and global growth in the world. Among emerging markets as well, India's performance would surely have been outstanding, at least in a statistical sense. All the more given the fact that this is a year when China experienced a lower than trend growth in its overall growth trajectory. And that is how 2024 ended. But I will sum this up by saying that 2024 also ended with an indication of the kind of difficulties that 2025 might face. So, one of this is clearly the fact that there are issues that are arising over the global movements of oil prices. Oil prices are not remaining steady anymore. They're turning out to be not just bullish, but they're turning out to be unstable, number one. Number two, the political conditions that impact economic performance actually have not changed, and they might even worsen as we go ahead. Number three, the mega event that we are all waiting for, the entry of President Trump in office. which should happen within a few days from now. And that is expected to set in motion a large number of, one could describe them as upheavals or turbulences in the world of trade as he starts acting on his tariff agenda. Now, that being the case, I think 2025 will turn out to be a challenging year. So let's see how we go ahead and embrace these challenges as far as the region is concerned.
Thank you. So, amidst what has been a challenging decade so far, Asia has led the global growth story. As you mentioned, India and also China have been the leading growth centers, and they've also been anchoring future growth expectations for the world. The recent UN World Economic Situation and Prospects 2025 report, which released last week, also gives a nod to the same. In the context, how do you think 2025 will look for the South Asian economy, the world economy? What do you think will be the main positives and opportunities that the country should tap on to consolidate their growth goals and ambitions?
Divya, I think what is that to be noted carefully is that what happens to the American dollar vis-a-vis the rest of the other regional currencies. I think this is where we are seeing a trend where the American dollar is clearly getting stronger. And one of the reasons for that is probably the fact that there is an expectation that dollar has become a currency which needs to be held on to. So there could be some kind of hoarding, there could be some kind of prominent hedging in the global foreign exchange markets. And this is going to impact the regional currency movements and the ability of countries in the region, particularly in South Asia, to influence their foreign exchange reserves. So, for example, if we look at India now, the rupee dollar rate is at around 86, 86 rupees vis-a-vis one American dollar. It's a rather sharp decline. Now, that is obviously combined with the fact that there have also been outflows of portfolio investment from India over the last 3 months. And again, those outflows are a result of the fact that fund managers globally are being very cautious. They are not totally sure about which emerging market is going to become a better one among the cohort once the United States has a new president and once there are certain actions that come with that presidency. So there have been these outflows, there have been profit booking, the dollar is declining, and all these are actually making the cost of trade fairly extensive. Because today, when traders look at the possibility of invoicing their products, they find the dollar expensive and they actually are not totally sure about which currencies they should pick on for the medium term for invoicing their products because none of those currencies are actually showing a stability vis-a-vis the dollar. Now, this is a peculiar situation which we normally don't face, but this peculiarity has to be combined with the fact that there is a hope that the Russia-Ukraine conflict might end once President Trump comes into office. Now, that will be a very positive move, primarily because of two reasons. One, the Russia Ukraine conflict ending, and I'm not too sure about what will be the terms and conditions on which that conflict will end, but whenever it does, it's firstly going to open up all the channels for external distribution of wheat and a large number of other food grains from Russia and Ukraine, which till now have been sporadically disturbed. So that is definitely going to influence the supply conditions of food grains across the world, and particularly for regions like Africa and the rest of Asia as well. This is going to have a good impact. The second important impact of the end of that conflict is going to be with respect to global oil prices, because right now, the latest United States sanctions on tankers that are carrying Russian oil has again created a significant amount of complications. And when we look at Asia, China and India have been the two largest economies that have been the biggest uplifters of Russian oil. So, with those sanctions coming in and the access to Russian oil getting difficult, both China and India will now need to go back to other sources of procuring global oil, which is essentially the Middle East and North Africa. And those oil prices by themselves are going to get affected by the supply conditions. So I think these two factors are going to play a very important role insofar as the larger macroeconomic conditions of regional economies are concerned. And let's not forget, we are principally discussing India, but if these are issues which are serious for India, then they are going to be even more serious for those countries which are not sitting on huge piles of foreign exchange reserves and which are clearly dependent upon how regional conditions shape for influencing their ability to expect, you know. And final point that I would like to make is that I think there is an interesting development which has just happened. We have seen the BRICS group, the Brazil, Russia, India, China, South Africa group, getting significantly expanded. And the entry of Indonesia into BRICS as a formal member is a scenario where, for the first time, Southeast Asia comes into this group. So, in a sense, the character of the BRICS grouping is now becoming much more global in that sense. So, we have Latin America, we have Africa, we had Asia with China and India, and those from the Middle East, but now we also have Southeast Asia. So, I think this is actually beginning to turn into an interesting prospect because by themselves, the BRICS bring in a huge amount of people and large number of markets into their calculation and scope. So this is an order whose movement and growth we will need to watch carefully, and perhaps it might actually become a decisive bloc influencing global economic prospects as we go.
In your first response to the question on how 2024 ended and how 2025 looks like, you ended with a set of challenges on how 2025 is likely to, on what the countries in 2025 are likely to face. I would just like to probe that a little bit. How would you rate these risks for South Asian countries, and what do you think the region should do to tackle them so that they can stay the course on their growth goals?
Let me go back to the point that we have been discussing, Divya, about the American dollar. Now, what we have seen, and this is something which we have discussed earlier on this show as well, that the American dollar is the preponderant currency across the world in which countries invoice their goods and services. Well, that being said, the problem that is now arising is that an expensive dollar is going to create enormous problems for all countries because they don't just have that much amount of foreign exchange reserves for buying the amount of American dollar that you need for entering into external transactions. The alternative here, there are two clear alternatives. One is to move to another currency, which is not expensive as the American dollar, but which still can be taken as a globally acceptable currency. So then we are looking at the global reserve currencies, and this I'm saying from a South Asian perspective. The choices are the next best choice is probably the euro, or the British pound, or the Japanese yen. Now, none of these three currencies are actually showing a great degree of stability because all of them are getting traded and hedged and pegged against the American dollar in various ways. As a result of which, for an exporter or an importer, it is very difficult to place medium term projections because most of the exports and imports are forward contracts. You know, they get executed with a lag and with a chosen currency. So that is a risk which the exporters and traders from the region will have to take. This is a risk which might bring with it considerable amount of costs. Perhaps this might be a good opportunity, like India has been proposing for quite some time, to shift a certain amount of trade to local currencies, including the Indian rupee with other currencies. The problem over there is that none of the local currencies, including the Indian rupee, are fully convertible in the capital account, and they can't act as global currencies. So if a trader sits with receipt in Indian rupee or some other regional currency, that currency has no other use except in trade with that particular country from which the payment has come. So these are issues which need to be worked out within a group of countries. So I would flag the the price of the dollar as an important factor in one of the risks. The second point that I'm going to flag is that I think there is a concern And this is coming out of the projection that the Indian economy is expected to grow at a lower rate this year. And the first advance estimates are pointing to a growth rate of 6.4%, which will be quite low compared with the current year's growth. Now, if the Indian economy is growing at 6.4%, then I don't visualize the regional growth to be particularly robust because India again will continue to remain the biggest contributor to economic growth in the region. At the same time, there are these concerns over tariffs. There are these concerns over how China is going to economically handle these tariffs. It might have already prepared, contingency plans, but those contingency plans might not mean that they have alternative options for increasing exports in a very significant way. And let's not forget that this year ended with an almost $1 trillion surplus for China on the exports. And it's going to be very difficult to push exports beyond that surplus because it's not just a question of sending exports. It also depends upon the absorptive capacities of other economies to buy those exports. I think there is a risk that we are seeing over there because, on the whole, the export capacities of the world might come down. And the third very important point is that there could be a serious issue that might emerge with respect to movement of people. And when I say movement of people, I have in mind the fact that a large number of countries in the region, India, Pakistan, Nepal, even Bangladesh, they depend significantly on inward remittances that are coming from outside. And a large chunk of these remittances, the bigger bulk, actually come from North America. And we are anticipating a situation where short term movement to North America, particularly the United States, is going to reduce under the Trump presidency when the H-1B visas get further reviewed and scrutinized. There's already a reduction that has happened with respect to Canada. If the military conditions don't stabilize, then movement to the Middle East from South Asia of people is also going to fall. Now, that again could be a serious factor. That again could be a serious factor because several parts of India, several parts of Nepal and Bangladesh are actually running households on the basis of these inward remittances, and these remittances are significantly contributing to the maintenance of private consumption in the rural areas as well as the suburban areas. So I think that's another serious risk that we need to factor in. The final risk that I would flag is that 2024 was the first year when the global temperatures actually exceeded 1.5 degrees centigrade. You know, the permitted threshold of the sort of UNFCC, which basically means that this now might become the norm going ahead. The global warming is actually going to get warmer in that sense. Now, we have already seen implications of those. We have seen a very sharp rise in extreme weather events all across South Asia. And South Asia being the kind of region that it is, the change in climate is happening so fast that none of the contingency plans or the adaptation plans are being able to keep pace with those changes. So there's going to be an impact on the livelihoods. There's going to be an impact on health. There's going to be a greater impact on the way societies and economies are able to integrate and adapt with each other. And the implication of that will be much more unplanned contingency expenditure, public expenditure for all the states and governments in the region. So I think there are a fairly large chunk of risks that the economies will need to handle from South Asia as they go ahead.
I would like to quickly sort of gather your thoughts on the topic of sovereign debt. The topic has become a huge cause of concern for many developing nations around the world in the aftermath of the events since 2020. It's a primary economic and policy concern in many South Asian nations, including Bangladesh, Sri Lanka, and Pakistan. All of them reached out to IMF in the last couple of years. How do you see these South Asian nations handle this critical issue, particularly when political leadership has changed at the helm in all of them, which of course will have a bearing on their economic policy? Your thoughts, please.
I agree with you, Divya. I think sovereign debt has become a matter of concern. It has been a concern for some time, but in a region like South Asia, the concern is that much more because of two reasons. One is that countries like Bangladesh, Pakistan, or Sri Lanka are holding on to sovereign debt of an external character, and that increases the external indebtedness that much more. If you look at the debt profile of India, India's external debt is much less as compared with its internal debt because the Indian government's strategy for financing its expenditure has always been to rely on domestic market borrowing as opposed to external. So, to that respect, the Indian debt in the current scenario is perhaps relatively more manageable, but there are some worrying signals that are arising over the high level of household debt that are coming up, particularly on account of the loans that a lot of households have taken, and these loans are not getting repaid, and the credit worthiness is not really the extent by which they were established. But going back to sovereign debt, I think at some stage, and in fact, these were issues that were being discussed across the group of creditors. You remember what happened with respect to Sri Lanka, that there was a certain kind of debt readjustment, debt rescheduling that happened, and that required the consent and approval of all major creditors, including countries like India and China. The problem is that that might not happen for all countries. Number one. Number two is that, again, for a country like the IMF, it becomes important after a point in time to check how much of the debt recovery conditions are actually being implemented, because it's not a question of the governments not wanting to implement those structural adjustment conditions. It's also a question of their capacities. Capacities to a very large extent are determined by local politics, the ability of the bureaucracy and the civil service to deliver on those, and the participation of citizens. I suppose in Sri Lanka, the conditions are not as bad as they were before. So perhaps there is some improvement in sight. But for a country like Bangladesh, blow up in sovereign debt at this point in time makes things extremely difficult, even for an approach to the IMF. Because what is important for the IMF is to assess the long term political stability of the country. And that is something on which Bangladesh is not on a very good score right now. Pakistan again has been going through these various cycles of borrowing, repaying, reborrowing, and so on and so forth. And it's not a very good situation. And I really think this is where, coming back to something which we were discussing earlier, if you look at the balance of payments, external sectors of all these countries, there are huge outflows on the debt repayment accounts. To a very large extent, they're being compensated by the inward remittances. Now, if we connect these two together, and if these outflows increase as a result of the debt servicing liability, but on the other hand, the remittance inflows go down, then the gap in the balance of payment becomes that much larger, and the balance of payments become actually very fragile. So that is a risk which the region is running.
Finally, more than one country from South Asia is set to graduate from the LDC status, the least developing country status. Bhutan graduated in 2023. Bangladesh and Nepal are set to graduate in 2026. In a way, so 2025 becomes the penultimate year for these countries before graduation, which is bound to have significant impact on their economies. Particularly for a country like Bangladesh, it's going to be quite significant. How do you think 2025 looks for them?
Well, I personally think that for a country like Bangladesh, I mean, Bangladesh would probably be thinking that if the graduation had not happened now, if it could have happened a little later, it perhaps would have been easier to handle because of the internal conditions, and also because of the fact that globally, the year 2025 does not look to be a particularly stable year. There are uncertainties in the pipeline. which are difficult to assess, anticipate, and adjust. I think there's one important point that we need to understand in the respect of the graduating countries. This will bring them into a whole new world because as LDCs, they used to get preferences in market access and donor support, which is entirely unilateral in character. But once those go, it's a different world where no unilateral access will be available to these countries. These countries then will have to fall back on their comparative advantages, efficiencies, and other internal strengths to connect with the rest of the world, maintain their exports, earn their respective foreign exchange, and balance their economies. So it's a question of their moving into a world where they're not going to be handheld anymore. And till now, that might not be a very easy situation to foresee. If you look at a country like Bhutan, for example, I think Bhutan has, in a sense, made it pretty clear in terms of the conduct of its public policy that there are some red lines that it is not going to cross. It is not going to cross the red line on sustainable development. So it's going to limit tourism. It's not going to cross certain other red lines when it comes to industrial development. So industrial manufacturing growth is not the line that Bhutan will pursue. It will focus much more on services-led growth, which it has. For a country like Nepal, it's not that easy because Nepal has a larger population to support. Nepal has had a particular type of economic development characterized by itself, and there have been instances of natural disasters that have been far more severe for Nepal than other economies of the world. And Bangladesh, as we all know, we have discussed this periodically. The point at which Bangladesh stands at this juncture is a very critical point because a lot depends on how Bangladesh is able to restructure its economy through a stable system of institutions. And those institutions have to be politically sound and otherwise socially inclusive and credible. So perhaps these are not the best of conditions that these countries would have expected to be in a year when they are graduating out of their LDC status. But I think on my part, I would like to wish them all the very best and welcome them into a brave new world.
It's been great chatting with you, Dr. Palit. Thank you for your time and for sharing your rich insights on the subject. As the region continues to overcome the many challenges and move forward economically, we do hope that the conditions stabilize and the countries lay the foundations for solid growth phase in 2025 and beyond. Thanks again for joining us.
Thank you so much and hope to see you again.
You were listening to South Asia Chat. To learn more about our work, visit us at isas.nus.edu.sg. You can also follow us on social media. We are on Twitter, LinkedIn, Facebook, and Instagram. Thank you for tuning in and have a good day.